Hey, welcome back to another live stream, 0xResearch. Myself, back on the show, joined by Boccaccio. How you doing today, Bach?
Good. What happened to you? You left me all alone last week. You didn't give me a heads up. I was just here trying to chat to people. It's very difficult for me.
That's not true. I did give him a heads up. I was out in nature for most of the week. Spent some time at a friend's farm. Spent some time out at the lakes, outside with the dogs. So,
Did you sell before you went?
Did I what?
Did you sell?
Sell
before
what?
You went? Any exposure, crypto exposure?
No.
No, you just went.
My only exposure is BTC right now. So.
Okay. So
I'm okay.
You don't really feel pain.
I'm okay. I'm like SAYLOR right now. Not that I'm top blasting every single wick, but in the sense that it's fine if it goes down. That boy asking, is it over? I don't think it's over.
Who's asking this?
In the comments, asking if it's over. I don't know. I don't think it's over.
I don't know. I've realized it's so fun to be bear hold, like telling people
if you didn't make money, you're fucked. Get out.
Yeah, no, saying stuff like you should be happy with what you made this cycle.
Oh yeah.
Or like expunge your mind of your peak net worth. And then there's one more. Also like telling people they were wrong the whole time. Yeah. It's fun. But I actually didn't sell enough. I don't think I do charts on here that much. But.
Yeah, I'm recalling a conversation that we had maybe a month ago where you said
I'm never selling.
I sold some hype, and then you said, and then I bought it back, and then I didn't sell it again. So now I'm wondering, like, how are you feeling about that decision-making process?
Well, to be fair, I'm pretty sure it's just really tough for me to sell. I'm not a big seller. I'm a big like buy and hold, and it'll go up. I know when to sell. Like, it's also particularly difficult this cycle, I think, because the assets that I own are like technically undervalued, right? Like on whatever multiple you put it on and you compare it to things. Now some smart ass is gonna say, oh, that's all overvalued. Like, yeah, okay, that's fine. You can argue that, but I mean, these are like, it's the first cycle where there's something that is like generating $1 billion in revenue a year and shipping that into the token. And you're like, well, I actually don't really want to sell this. But like, I'm very comfortable selling meme coins and stuff. There you go. Thank you.
Yeah. No, I agree with that view. I think because I think, I don't know, you get a lot of macro LARPing just in general of like, didn't you sell the exact top of the market and then buy back the bottom? And it's like, no. And I would agree, like, to the point you're making here, you don't really need to, if you're buying and holding things that actually do well and grow and increase their price per token or price per share over time. You know, you don't really have to be so concerned about that. So I can understand that sentiment. I think just in the crypto side, it's just so historically been that those down periods are pretty cataclysmic. But we'll see. I mean, when you actually generate $1 billion in revenue, like, it's a bit different than when it's just a meme coin.
Yeah, I mean, like you don't struggle selling meme coins, um, but
Some people do.
like even Bitcoin is tough to sell though. Like, and it technically has no like intrinsic value, but you're still like, I don't want to get rid of my Bitcoin. Um, it's tough. I think this is like the first time. Well, last time I didn't sell enough, 21. Um, and I held it down 24 March. Do you remember we had a massive, well, not a
Yeah.
massive pullback, but we had a significant pullback. I didn't sell it. Like, fuck it. Like, I don't
Yeah,
need
I
to.
hung out through that as well.
Yeah, that to me felt not like a bear, but like a half bear almost. It was just like a few months. Um, and then this time I was like, I don't know if I can do it again, so I just sold a bit.
Yeah, but I think, and I don't know if other people didn't have this view, but like to me, I actually thought the more clear like sell the top opportunity was more of like January of this year, like post election, like kind of Trump top, Trump coin top. Like I don't know, you had U.S. government is gonna buy Bitcoin hand over fist as part of like a new reserve. Like there were just so many. It
Yeah,
was so over exuberant to the bull side, and like president launching a meme coin going to 90 billion FTV in like 2 days. I think there were a lot of reasons to just like call it there and maybe and sell some stuff. And um obviously like March April were pretty bad, so like you got an opportunity to get back in if you wanted to. But I have felt like that the remainder of this year, at least for crypto, has really just been like the DAT story, honestly, more than anything. It's like DATs came in, they bought a bunch of coins and pushed them back up, but like it didn't really feel quite as similar as like the past 2 years have been.
yeah, and now like all of the DATs are. I mean, I saw first of all, SAYLOR shipped in at 102.8K or something.
Yeah.
He bought
Great announcement.
840 mil, and then Dan Smith sent this into the 0xResearch chat. If you're not in there, I actually don't know if the link is public yet, so I'll see if I can share it around. But he was talking about it, BMNR bought like 200 mil. Um,
Yeah, he tweeted
like
about it
that was a big
actually.
announcement,
Let's pull
and
that up.
like smallest purchase since inception, they hold 600 mil in cash not deployed. um I don't know what that story is. Like, I don't know if you remember this, but first of all, I feel like Felix, shout out Fajao, he's always been like super not a big DAC guy, and I think that makes sense. It's not an interesting story at all. It's just like, oh, this company owes a lot of dollars, and then it buys into these tokens to back it, and it's like generating yield fruit or something. It's not a sexy story. And now we saw Master, not Master, MicroStrategy, MNAV fall below 1. It's at 0.9 or something. I wrote about it in the newsletter this morning. And like as MNAV goes lower, it's tougher to. This is what James Christoph says. I have no edge in that, but he says that as MNAV goes lower, it's harder to raise, and then therefore it's harder to buy. Therefore, MNAV falls. I don't know. It doesn't like. I don't really get the DATs. I never like the initial DAT. I got the DAT story in that Tom Lee shipped a bunch of money into ETH and then it went up 2x in a month. Like that's the DAT story that I remember, and that was a great story for ETH. And then now it's like, okay, well, some DATs are selling underlying tokens. Some are just buying way less. The big bad DAT, like the big boy DAT, is under 1 MNAV. It's like it's a weird story.
I mean, I think the story was always pretty clear, at least from our like I don't know the pipe deals and just the fact that you could structure one of these things, announce that you're buying some big amount of coins, and then the share price of this thing goes up 10x instantly off that news. And maybe if you're a pipe investor, you're locked in at some valuation way below that, and assuming you can just hold that price up for 90 days or 180 days or whatever, then you get like sort of a free exit opportunity. I think I think basically the story was just like that worked a couple of times, or maybe the expectation was that it would work at least early on with I think there was sort of a time constraint there with maybe the lockups on some of those pipe deals. And so the early investors to those were pretty excited about it. And then you saw more, large funds and other folks jump into more and more of those deals, and like, you know,
Yeah.
you get to a point where you've diluted it, and then if any of these, like if the coins go down or if they run out of buy pressure there, then of course those aren't going to turn out as expected.
I mean, and the story was being sold like it's like the ETFs again,
Yeah,
right?
they were
They were,
selling it as like opening up, you know, this is
and
going to open up capital markets all over the world, man. Like
like,
they can't buy the ETFs in Senegal, man, but they can do a DAT, and that's incredibly, you know,
it's
that's
like,
democracy at work, man. Democracy of capital markets. Yeah, I don't know. I think that story was, it was just a bit, it was a bit stupid from the get go.
yeah. Yeah, I don't know. I never got the point of it, and then it's one of those things that sounds really good in practice, but apparently doesn't work as well in practice. It's also my first time with this kind of a structure, so I'm actually not as familiar as like I think other people are. So I can't comment really to the intricacies, but I think anytime something is being like pushed for this many tokens as like being a really really good catalyst, you kind of want to be wary about it, especially since it has all of the buzzwords, like you said. It's like it's opening up capital markets over the world. Like no, it's not. Like the ETFs are unironically like a good thing that happened to crypto,
Mhm.
and we might get some form of passive bid. From what I understand, currently the majority of ETF holders are people like you and me who hold Bitcoin, and then just decide to put that in some more tax efficient account, or to hold it in a place that feels a little safer. Um, I don't know who was talking about, like Felix. I think he holds only IBIT. He doesn't hold any actual Bitcoin, which
Yep.
makes a lot of like, if you're not super into this idea of like self custody and whatnot, and you're just like, well, I just want an inflation hedge, then just fucking own it. I bet. I want to say
Yeah.
EBIT constantly, but
Yeah, I think that there's a couple advantages at this point. I mean, you mentioned the tax advantage status. Like, if you have certain accounts in the U.S., that's 401ks, that's IRAs, different accounts like that with potential tax benefits. But I think the other thing is like, I don't know, you see wrench attacks happen in major metros, and it's like if somebody can knock you out and get your password or your seed phrase or, you know, your fingerprint on your phone wallet, um, it's obviously not too secure. So you can own it with a traditional asset manager, and nobody's going to be able to knock you out and
well,
get your IBIT. I mean, it would be much more involved, like hypothetically still possible, but there's I think a bit of a difference there as well. The tax
yeah,
advantage status is certainly probably one of the bigger points, and just probably like peace of mind of not
yeah.
having to manage a phrase on a piece of paper or something.
And I think anytime, yeah, I agree with you. And like anytime some form of structure like this pops up, or like I don't think this is necessarily about that, but I think you can say this about a lot of different things. But like there are, I mean, in the real world, there are also like derivative plays, not in the sense of like financial derivatives, but like something pops up, people see that there's a lot of interest for it, and then some people will say, well, okay, like there's a lot of interest for this, but how can I personally make money off of this, or how can I get involved in this such that I can also get richer and richer? And to me, that's kind of felt like that kind of a play. I'm sure there are some DATs that were like focused on a specific thing, like some for staking, some for yield generation, some to be like used in DeFi. But I would say like probably a decent chunk of them were designed to help insiders and people who are close to these projects. Um, and I
Yeah,
think
I found the staking thing, to the staking point, like I found that pretty weak as well. Like, I don't know. I think it's pretty expected that we're going to have some of these staking ETFs, and even
yeah,
I think the first Solana staked ETF is already online. So, like, there's sort of an expectation that some of it, like these products are coming to market anyway. So, it seemed almost more of like a capture the ARB while you still can, like a capture the reg ARB for now. But yeah, those, I feel like those arguments were kind of we're going away to an
yeah,
extent.
but the government is also kind of slow, right? So like, I mean, they could say like, yeah, we're gonna implement staking ETFs 2026, and it could be 2028, and they never do it. So that could be their argument, but I agree with you. Like we already we have a very friendly administration who is exceptionally involved within crypto. Hester Pierce is very He seems to talk a lot about staking and a lot about how these tokens should be utilized. So I wouldn't. I agree with you. It was kind of like a free 4-month period, and they were like, yeah, let's like 3-4 months they won't have it, we'll have it. Let's see how we can get this implemented. You were talking about phone apps, and there's something cool that popped up today. I don't know if this is in the notes for today, but Aave launched their
Yes.
iPhone app. It is very good. Aave launched their iPhone app, their Apple Store app, iOS app. Jesus, I saw this from Jack's tweet. Jack Random, part of the Blockworks research data team. My immediate thought with this is because you can use cards with it, right? And it's like, okay, well, the Plasma One is kind of like if this is a neobank and Plasma One is like, and Plasma's big DeFi app is Aave, it's a bit tough, right? Like to compete, especially since this is, I assume, going to be on any chain that Aave is on. So you could use Base.
Yeah, I would imagine.
Or whatever. Now, this is just to say that like a neobank product is a very difficult product to build, and it requires a lot of like jurisdictional contracts and plays, and you want to be embedded into these different countries, and you need to figure out how people interact with the money, etc. So like there's definitely a way for Plasma to beat them out. I'm just like, my first thought was this is probably not great. But also you never know. Like you never know what's going to happen in the back end. So
yeah, I maybe a point on that is I think more and more projects are realizing that like community first and like promoting teams within your ecosystem and this, that, and like you got to go out and make the revenues for yourself. I think this is a good move by Aave. I think the point that Jack makes here, like the balance protection, is pretty interesting.
Yeah.
Providing up to $1 million in coverage per customer. That I feel like has probably been the biggest missing link for broad adoption of a product like this, because I don't know, you can use a neobank, you know, a Robinhood, or probably even a Coinbase, some others, plenty of online banks now where you earn basically the risk-free rate. And of course, you know, at least within the US, you're FDIC insured on your deposits up to a certain amount. Obviously we don't have that in DeFi, and there's been plenty of examples where, you know, farming yield on chain has resulted in total loss of deposits. So this feels like a big step for them. Like you could actually get meaningful additional capital from folks, and if you can build like a compelling, I don't know, an interesting enough like kind of broad app experience, like maybe you get some net new users flowing in into the sort of on-chain economy via this as like their stepping stone. I think it makes a lot of sense. I think what's interesting too is we've been like kind of waiting to see this like adoption of mobile, and it's starting to kind of slowly trickle in. Like wallets have been the thing for the longest time. But with Aave going mobile, and like even some trading apps are trending more in that direction. It's interesting to see.
Yeah, I agree with you on this. There's yeah, I mean the cash products or like the credit card neobank products became more and more popular this year. My only thing is it's kind of difficult if you're not American, because like I spend euros, right? And or like if I'm traveling to Turkey, I'm gonna spend lira, or if I'm traveling to Japan, I'm gonna spend yen. And I think I checked out Payy. Not, I don't have a ref link, and I'm not sponsored. Well, we're not sponsored. And they charge 1% on FX, which is really high. At least to me, it feels really high. But also, it makes sense because there's also no yen stablecoin or anything, so you can't even hold some of these products that like you may want to spend. So I feel like that's the thing that they really need to start fixing at some point, or they need to lower the fee, the FX rate. 1% seems quite high. Am I
1% on a conversion, or what do you mean?
Yeah.
Like, I guess if I want to, it depends. Like, what's the spread on the trade in the first place?
Yeah, we talked about this before as well. I just realized, and it's like we're gonna do the airport desk thing.
Yeah. Well, The question is the spread plus the fee. So like, I don't know if the spread is massive, then it doesn't really matter what the fee is. But if they're quoting you a good rate, then 1% could be fine. Because I mean, the spread at like the airport might be like 25%.
Yeah, I don't know. I want no spread, or I want very low. Because that's the argument. Like,
I don't know if
I
you'll
don't
get
know,
zero.
1% feels funny. Feels a bit much. But I guess we were paying 12% on Solana swaps just to like off tips at some point. So
Yeah, I mean, I think as long as it's as long as it's cheaper than the other instant methods, like going to a desk at the airport, or like if withdrawing from an ATM, like in the local currency, if there's a fee for that, then it's fine.
I think it's 3.5% if you spend without it.
Hmm.
Anyway, yeah, maybe it's not that bad. It was just something I was thinking about. But I agree with you. Like, these apps are getting bigger and bigger. I don't really care about the trading apps on my phone. I feel like I like trading on a desktop. Well, I don't like trading at all. But if I was going to be trading more actively, I'd be trading on my desktop. But I do want to use some of my crypto, borrow on it and spend that, etc., etc. I think it's like, I talked about this and people just said I was trying to evade taxes, and I was like, no, it's not. I just don't want to pull out money into the bank. Like, I don't like it when banks lend out my money as well. Like, I know that's how the entire economy works, but I don't like fractional reserve banking, and I want to hold my own.
Technically, that's how it works in Aave too. It's just you're lending it out. You know what I mean?
Yeah. Yeah, and the risk is actually much larger as well, because yeah, that's very true. I guess what I want is not Aave spending money. Whatever, you get the point. No, it's cool. I like it. I'm excited for this. I don't know who will use it. Maybe I'll try and onboard my girlfriend, my fiance, and see if like how much she enjoys it. Because if she likes it, then it's like that's probably the non-crypto crowd getting it already.
I guess the interesting, maybe the question I'd have is like how, if it's differentiated from the existing desktop front end, like does the 1 million in coverage come when you use the normal application now, or only this Aave app specifically?
Yeah, that's another thing. And also, who's eligible? To me, this feels like it
Yeah.
would be eligible if you're like above 10 mil, right? Like, and you're just lending it out for Aave. Like, Justin Sun will definitely get eligibility. I don't know if I will. But it is a cool step. I was thinking about this last week, actually. And I was like, yeah, there's no like FDIC insurance and stuff in crypto, and that's going to be a pain in the ass. But if I don't know how they insure it though, like 1 mil per person is pretty hefty.
Yeah, I'd like to know.
We need
how.
to check on this a little bit.
Yeah.
I don't know how they cover it. I don't know how it works. Because like with banks don't have the money for it. They can't pay for it. It's the central bank prints it, and then they make everybody whole again. But I don't know how the hell Aave would do it. Doesn't make a lot of sense to me. Like, imagine having to deal with bankruptcy with Aave and stuff, and then like you gotta get your $1 million. Seems impossible.
Yeah, I mean they have like 30 billion in loans or borrow.
Yeah, but that's other people's money.
Yeah.
Give me Danny's money. I don't know. We'll see.
I just mean there's potentially a lot of assets to cover.
Yeah. I was thinking this was going to be Aave V4, but apparently it's not. But that's also like one thing that I feel like people are very excited about. I don't know enough about it to chat about it, but Aave might have a good year. They also have they have buybacks now. One of the few fully diluted tokens that has buybacks, and one that I can see stay relevant forever, barring some massive like issue that may or may not happen. One that I can see, like one of those tokens that I would want to bid if we had like a prolonged bear market. And I was like, yeah, it's an attractive one to buy.
Yeah, they have I guess maybe the growth question mark is something to consider, like for the longer term. You know,
Yeah.
they have competition on base in Morpho, but like of course on Ethereum they're still king. It just, you know, is the ETH heyday kind of, you know, I don't know. I think this is a question we've been asking for a long time, but you know, question marks
Yeah,
like the ETH's growth longer term. Where is that ecosystem going?
I wouldn't be surprised if a lot of serious money just stayed on ETH forever, like, or like very slowly trickled out.
I
That
do
it's
think
like
they have a lot of captive, basically funds there that aren't going to move.
like
100% true.
yeah, like
But
I
it's
I
kind of antithetical, like to growth. If the business relies on just like stuff that doesn't move, they need to also like continue expanding in the future. So I'm thinking about some of those opportunities of like, obviously they've seen a good amount of increase in borrow and lend like in the past few years, but you know, of course, some of that is speculative. How much of it was due to like ETH itself as an ecosystem, and then like the assets there um, actually growing and driving new demand to Aave? I'm not sure. And on some of these newer venues, like I said, they're competing with Morpho on base, which is probably like kind of the other big consideration today, at least in EVM land, right, for the future.
yeah. Yeah, I mean, base Morpho has 2 billion in TV or like 1.8 billion in TVL, and Aave has 900 mil, but Aave on Ethereum is 20 bill. So it's
Right.
like, yeah, like where does the growth come from? I think Morpho's thing is that they don't charge anything on anything. It's just like a public good at this point, and I think eventually they're gonna have to add a take rate. I don't know how it's going to work. Um, I don't know. I don't know how Aave will compete with Morpho on base, but it's also like if Morpho's only competitive on base, that's also not a massive issue for. Like I think that Aave has enough weight to pull around with chains and say
Hmm.
you can. I think this is what happened. I mean, there's no Morpho on Plasma, and there's also no. I don't think there's going to be Aave on stable, for example. And I imagine like going forward, a lot of this will happen where it's like one or the other, because both can't do well on one chain. So I imagine they're gonna just try and fight it out one by one. And they don't seem to like each other very much as well, despite both being French. They don't like each other, so we're gonna.
Maybe that's why.
Maybe that is why. I'm sure there's like some provincial Parisian thing going on there, but um,
I think in my head, what I'm indexing to is like, if you were to ask me to pick out a chain that I thought is maybe comfortably like, you know, maybe 10xing over the next five years or something, like base feels like an easy pick just because of the connection to Coinbase. Whereas like, you know, like if I look at Binance and BNB chain, like I think they've already kind of had that moment and it's already like pretty, you know,
yeah,
well integrated into some of the activities that they do on the exchange, and they like rope in BNB chain and BNB the asset. But Coinbase doesn't really do that today, and they have the chance to do that and then like grow that ecosystem a lot.
yeah,
And I don't think that sort of opportunity is so clear elsewhere. So I'm just looking at that and thinking, okay, if it's a few billion today, like it could be 20 billion in a few years, and then that would be like meaningful relative
yeah. I
to Aave
do.
today.
I think that's a good point. One thing I will say, like I like Base a lot, and I like the Coinbase team and what they've been doing with Base. But I mean, Binance also had a very significant first movers advantage, and then Coinbase did all of this. When did BNB chain launch? Maybe 2019, 2020, whatever. Let's say that. Um, I mean, it's been 5 years, and then Base launched, right? So maybe the heyday for it was in 2021, and that's why Binance, like maybe the heyday for all of these like L1s, L2s that are associated um, with centralized exchanges was in 21, and that's why like Binance managed to grow so heavily. um, so we'll see. Like I don't fundamentally disagree that it could do well. I'm just like, I don't know. I guess like I wouldn't count out Ethereum that much, because to me it makes sense for very significant capital that just wants to be borrowed and lent out to stay on Ethereum for the time being, given that it is very trustworthy as a chain. But also because Base is associated with Coinbase, there's this element of like regulation, and it has to work, and people have to be able to get their money out of the chain, because it's like a U.S. regulated company, a public company. Um, I like when I'm buying Bitcoin now to hold, if I'm not buying it on like Bitcoin chain or on Hyperliquid and then transferring it over to Bitcoin chain, I will hold it on Base because to me it feels safe. It's like they're regulated. I really don't think that they can do any big shenanigans, so I'm very comfortable with holding stuff there. So maybe that's also a benefit for them. I don't
I
know
think
if
that
like
makes sense. I feel like we're seeing pretty meaningful adoption. I don't know. You use a lot of newer apps, trading apps, Cryptexes, etc., and like a lot of these newer ones, it's deposit USDC from Base is a pretty common option. Like
yeah,
it's becoming a bit ingrained into like historically it's like deposit ETH from Ethereum, and then lately trading bots and a lot of other apps like on Solana, and I think now we're seeing a bit of that at least with kind of like integrations of new apps, a lot of base focused integrations.
yeah,
Which makes sense.
yeah, it is. Well, I want to share this chart, but I'll just share it later.
I wanted to show this just related to what we're so there we go related to what we were talking about around BNB versus Coinbase and Base. I just thought this was interesting. Like, I don't know, we've seen, and we know that a lot of this activity is like wash trade volume. That's not really the point I'm trying to make here, but that Binance and BNB chain, like they did this alpha campaign where you could earn points based on trading volume, and it was kind of like this logarithmic. You earn X amount of points for $1, and then 2 points for 10, and then 3 points for 100, and 4 points for 1,000. So kind of like an exponential drop off in the points you earn, but basically promoted people doing an absolute crap ton of volume. Either way, this was like a massive jump from them compared to 2021. So like they were still able to pull on the levers of this ecosystem to like drive trading activity, and they've tied it into they have Binance Alpha now. They're still doing like some of these launch pools and these other campaigns. So I think the broader point that I'm making about like Base and Coinbase is that I don't think like they've not successfully done this yet, which Coinbase has done. And I think that they can still like leverage this opportunity into sort of a ecosystem by like further integrating what happens across those. And we're seeing them like kind of start to play with those ideas, right? Like they've enabled, morpho lending in the Base app, for example. So it's like you just use the app, but then you lend out your BTC and borrow US stables against it, and it's all just done via Morpho on Base behind the scenes. And they're kind of like slowly rolling out more of these integrations, like with the DEX aggregators for trading on Coinbase as well. So I just expect that they'll be able to kind of play the same game that Binance has, and it should be pretty meaningful to their growth.
Yeah, yeah.
Interesting
I
to note
guess
this trend though on BNB. I hadn't noticed that the volume was pretty much like straight line dropping since about June.
Yeah, I think was June Chinese coin season. When was Chinese coin season? Do you know what I'm
No,
talking
that was more recently. That was like September, and they had and it picked up for a couple of weeks in September. The Chinese memes were going pretty crazy. I mean,
That was fun, but I didn't do anything.
they were doing like 10 billion a day in meme volume in September. But no, like in the beginning of June, May and June was when they started this Binance Alpha trading campaign. So that's when the volume like massively spiked. And they had like some project token launches that like project tokens that just like instantly went to billion plus market caps. So
When are you a buyer, Danny? Not of BNB, but of what tokens will you buy when we inevitably, hopefully, bottom?
I mean, I think BTC is kind of in its own class at this point. I don't know. I think this is something that's been said a lot, but it's like kind of separated from the rest of the crowd. So I kind of view that akin to like, accumulating gold or like a spy position or something. So But I do think, yeah, I mean, I'm not gonna like say a price or anything, but BTC is something I like. I think hype still is interesting. Um, I think it aligns pretty closely. Like, I don't know, I you can check the Blockworks disclosures. I own a lot of Hood, Robinhood. I think there's just sort of like I don't know, their core thesis is like this generational transfer of wealth from boomers to millennials, and millennials, this is a platform that aligns more closely with what they prefer or want to gamble on or want to invest on, what have you. Started out mobile first, and I think it fits that. I think there's something about Hyperliquid that kind of aligns somewhat with that thesis as well, although it's more perp centric today. um, I like hype from the perspective that, I mean, it seems like the most meaningful asset within the space today, just from like a business revenue generation value accrual to the token perspective. Though I do think there's a broader question, and like we talked a little bit when I was here, maybe last Monday, um, with Charlie about some of the Hyper EVM stuff. I think, I guess what I would want to see from Hyperliquid to like continue to be, supportive there is them continually seeking out new revenue opportunities and like taking them for themselves. I think personally, this idea of like fostering a community and like having other teams that build stuff and then those things make money like in your ecosystem, like if you don't have a take rate on it, then I don't care. It's not
Fuck the
meaningful.
community. That's your take. No, but it's
Yeah. And not necessarily like fuck the community, but like you can be the whole community. Like you can do all the apps. I think we've seen like the difficult part of looking for upside in Solana today is that a lot of the most successful things like Jito and I don't know, we see 0xResearch coming to market, and we see, lots of these different like revenue opportunities that just are not like reflected or captured in Sol itself. And so like when you're just weighted to that, check disclosures, when you're just weighted to like, if it's just the chain fees, for example, and those are compressing, and then you're not somehow finding new revenue opportunities, then the upside looks kind of, it looks questionable. But I would expect hype. I mean, I think we're seeing it from them, right? If they get into borrow lend on the main protocol, that's a new lever for them for revenues, and I would expect them to do more. And so, like, to me, there's this weird counterplay between potentially hyper core and the hyper EVM, where stuff that maybe gets played around with on the hyper EVM is probably something of like a testing ground for products that they could just natively integrate themselves and make the money on. And I think that's most bullish for hype token itself. What are your thoughts on that?
I completely. So this one's tough. I think Hyperliquid is doing probably the best way of monetizing what you just talked about, which is like other people building on top of them. Because if a terminal builds on top of you, you're taking like your chart. They still have to pay fees, and they
Yes.
get to monetize on top of that. HIP free markets, same thing. Spot bridge, like spot issuers, same thing. They take 50%, but you still let like these teams make some money. But we were talking about this with McBrennan. You missed it on Friday, and I think a lot of chains realize this is that like you get these builders to come build on top of you, and you can't really like you can't charge them rent. Um, well, you can, but like you're not doing it because there's no built-in way of doing it. Versus with Hyperliquid, like it has those free products. Let's say HIP free spot markets, HIP2, and then also like builder codes, which kind of have a built-in rent mechanism in that you're still getting like either 50% or 100% of the fees, and you're allowing people to build on top of you to get the remainder. I guess like builder codes doesn't really fit into it because the same as Solana, like a bot's charging a percent of fees, whatever. But there's that mechanism of getting like capturing 50% of it. I agree with you. Like you have to do that because or else you're building a public good, and public goods can't command very high valuations historically. And I don't know, like I would be surprised if we don't see Solana build in some form of rent mechanism. They should, and I would be surprised if Base doesn't as well. Like the more economically and revenue minded, I think Hyperliquid got kind of lucky because they are relatively new and they can kind of like mess around a bit. I don't think the team cares too much about like what other people have to say. I think Solana has had a particularly difficult time with this because for its entire history, it's always been bashed as not being decentralized enough. Versus like no one's like, oh, BNB is not decentralized. Like, yeah, buddy, like, we know, and
Yeah, and
you
nobody
know,
cares because they make a
nobody
shit ton of
cares.
money.
Solana has to like constantly defend itself, which is why it can't implement some of these things. And if it does, it gets a lot of like negative criticism. Versus like there's such a thing as sufficient decentralization, and there's such a thing as like building something that's super performant. And to do that, you need to do some things differently. I would be surprised if they don't implement something like this over the next few years. I would be surprised if somebody at the Solana core team wasn't like exclusively thinking about this, or however their structure is. Like,
Yeah,
whether Solana Agave or something is thinking about, okay, like we had 8 months where we were the most dominant chain in the world. Everybody was deploying on us, transacting on us, and we made a lot of money just off of Giro tips. But now Giro tips are going down. Now there's more priority fees being paid, but this means that we're not making as much money. But we still have all of these apps who essentially pay us nothing to get these transactions through, while they occupy most of our block space. We're not a public good. You guys need to start paying some money. Like, I would be very shocked if this isn't an approach that they're going to take, and rightfully so. I think these chains should start charging, because it's difficult to monetize consumers, but I think it'll be more easy for them to approach like B2B and charge the protocols building on top of them. That's also like way easier for them, I would say, in my opinion.
and I think everyone that's building in the space is like aware of this, right? Like we've pretty clearly gotten away from your token can just be worth any valuation with no revenue, and it's very clearly now like, oh, you actually have to make money to survive here, or your token's going to zero. And I think they have examples of like where this is well known within their ecosystem, like Double Zero's monetization model. Disregard the token price today, but like if they're gonna be able to capture X% of like validator rewards and fee rewards from all the members that opt in, like they have a pretty clear like revenue model that can scale. To your point, like does Sol need to find some kind of rent model or other model of like basically getting away from, like, we're seeing that chains, like a chain doesn't necessarily make any money, but a platform makes a lot of money. So if you can charge basically a platform fee to all of your partners that grow on you, then you can ensure that you make more money in the future. Because I think we're seeing this more and more. Like, I don't have this chart right now, but something that like Daniel Shapiro and Carlos, for example, like to throw around quite a bit is this divergence between rev and app revenues. And yeah, I think that's going to continue. So unless you can find a way to get a piece of app revenue, then you're going to struggle. So no, I agree with your point about the decentralization thing. And I think what we're kind of coming to is like a bit of a crossroads here where you can kind of go one of two ways. And if you go the decentralization, like full decentralization maxi way, you're going to just miss out on a bunch of revenue, and your token is going to be put in question. And if you like kind of say whatever, like we're just going to build the shit and make money off of it, you can at least point to your revenues and say the token can go up and to the right. And like, sure, maybe it's not maximally decentralized, but like, do you want it to be maximally decentralized, or do you want your tokens to go up?
Token to go up. Next question.
Before we go anywhere else, if you have nothing else to say on that topic, which I think we're in a pretty strong agreement on, I do want to do a quick shout out to our sponsors for today's stream, Katana. Thank you so much for sponsoring today's stream. Katana is an L2 built for DeFi and is pioneering the ecosystem category of productive TVL, believing that change should be graded on how efficiently assets are put to work in DeFi rather than just total value locked. From now until the end of November, users that bridge to Katana can earn boosted yield from CAT incentive campaigns, added vault bridge yield, and other chain revenue. Follow the link in today's show notes to get started. And another quick shout out to Uniswap Labs. Thanks to Uniswap for sponsoring today's stream. The Uniswap trading API solves the problem of adding crypto to your products without the hassle of needing deep crypto expertise, ongoing maintenance, or liquidity aggregation. The trading API provides access to the Uniswap protocol, which has processed 3.3 trillion in all-time volume, handled over 465 million swaps for more than 25 million addresses, all with zero security breaches. Developed by Uniswap Labs, the US-based team behind one of the most used DeFi apps, access some of the deepest liquidity in crypto, combining both on-chain and off-chain sources for optimal pricing. The same liquidity that powers billions in swaps, now available via a singular API. Thanks again. Shout out to our sponsors for today's stream.
One thing I want to say is, did you see that Uniswap Buenos Aires football tournament, soccer tournament, as you guys say? It looked pretty sick. I saw some guy do crazy stuff.
It was all Uniswap. They were all playing.
No, it's for like every it's for like the Eve. It's for Dev Connect, and it's for like the Eve teams.
Oh, okay.
It looked pretty cool. They got like custom jerseys made and stuff. It looked fun.
Who the front, like, who are kind of like the fitness chads of the ETH ecosystem? Because I guess some of the devs that I'm thinking of, not necessarily like I would peg them to be big soccer players per se.
Okay, let's not explore that thought too much because we're not going to get sponsors. But
I don't know who's the top team. What would be the top pick?
I saw some guy do something. I need to find it. Maybe we'll include it in the show notes. Maybe I'll ask the producers to do that, and then they'll be very upset with me.
All right, maybe no pictures of Ethereum devs. That's fine.
No, but it looked pretty sick. I like it.
OXZucky reporting in live from the event, telling us that ZK Sync won. So apparently the ZK Sync guys are soccer or football chads.
Oh, I didn't know that. Congrats to the ZK Sync team. Very, very good. Okay, last thing on that rent thing.
Yes. Not financial advice. Maybe it wasn't true.
Advice. One thing is, I wanted to finish up this B2B thought thing, which is that it's very dirty business to build a blockchain as well. Like, if anything,
dirty.
If it, like it's meant like you're doing a lot of really hardcore engineering. I'm sure that app teams are like very capable programmers and they're very capable scientists and they know how things work. Like, lending to me also seems very scary, but for like a whole nother reason, because a lot of math starts getting involved and like the money that is involved in that is very different to the amount of money that's in like another type of protocol, like an intense protocol. But since like blockchains are very, very hard work, I don't think that you want to I don't think AWS would have done well if it monetized through consumers. I think it monetizes through businesses, which makes a lot more sense. And I think that's what blockchains should also do, because it's a very dirty business and you just want to like charge a mass amount of fee to one guy. You don't want to deal with a billion people. Plus, like, you and I are more fee sensitive, I would say. Like you said, like some of these apps, I think, how much did Axiom make? Like 600 mil?
Axie or Axiom?
Axiom.
We have a dashboard. Hold on.
Okay. I'm going to make something up. You can correct me if I'm wrong. Let's say they made 300 mil over the past year. You can charge Axiom 50 mil somehow. I don't know what the math comes out to, but you can charge them, like 1/6 of every dollar they make you get. And they're still going to be on Solana, because the reason that they're making that money is because all of the activity is on Solana. And I think Hyperliquid kind of realizes this. And it's like, because like when Hyperliquid launched, I guess like HIP3 is a little bit late and HIP2 is also a little bit late, but this wasn't when like Hyperliquid was the very dominant perps. Like the others were, we're still arguing who wins perps. Like some people are like Drift, some people are like DYDX will make a comeback. Some people are saying Aster.
Yeah, White Whale said he's going all in Drift now.
Yeah, like it's no, Chamath is all in Drift. No, but I'm being serious. Like there are these people who are arguing that like Hyperliquid hasn't won, and I don't think Hyperliquid team thinks that they've won, but they're still going out of their way to like charge protocols building on top of them and like compete with them, which I think is the right thing to do, because these protocols realize that they're gonna make money on Hyperliquid. So you're just taking a percent of it. And if you're making your partner money, I don't think they'll have any trouble paying you to be able to have that right to make money. So yeah, I think Solana can definitely I think it's still, this morning I checked, it's like the third highest RAV or revenue, which I think probably translates that has, like, if we extrapolate, it probably has the third highest activity and like users spending money on it. So I would be surprised if they they should charge, and teams I think should be happy to pay. We say block space is infinite, and it's like a little meme, like block spaces and scarce, whatever. Like, you can just build on X chain, but it's not how it works. You and I both know it's not how it works. If what's a non-offensive? Like, if somebody builds on Harmony 1 now, like, yeah, they have a lot of block space. I'm not gonna fucking use it, and you're not gonna use it. Like, we know what chains we want to use, and chains should charge for that. I think that's not a very controversial thing to say.
Yeah, I guess maybe the only point I would add is that I think that over time, more and more, that's probably going to be obfuscated to the end user. And I think we're seeing this in some respects. Like if you use Phantom Wallet, for example, like, they have like 8 or 9 chains integrated now. And like you as the user, like, sure, maybe you don't use the in-app swaps. Maybe you pull up like Jupiter to swap on Sol, or you pull up like Airdrome to swap on your base balance, or they don't even support base yet technically, but I guess you could still do it hypothetically through the in-app browser. But I think we're still in this point where you have kind of like power users who still interact with things in a way where they're like kind of natively interacting with like the infra, like the chain underneath in many ways. But a lot of the newer apps, and like even this Aave app, I think more and more we're getting to that point where like that probably won't happen as much or anymore for like the typical user. And you'll just care about like what's this product experience you're getting, and not really be as worried about the technicals underneath it. But I think that kind of aligns with your point about, if you're Hyperliquid and you're this platform and you charge sort of like B2B fees to all of your partners who integrate you into their app experiences, like the user doesn't necessarily need to know or care that it's Hype powering the perps on like the Rabby wallet. They just pull up the perp tab and do a trade.
Yeah,
and I think that makes a lot of sense as a model.
I think so too. All right, what's our last topic of the day? We have 5 minutes. What are we telling people?
Am I too loud?
I think you're fine. I don't know. I read this as well, and I was like, I think Simpson the 5460. You're wrong, buddy. I don't think you're too loud. We'll get feedback from
We'll
people.
figure it out.
We'll figure it out.
Maybe not. Maybe they got the volume on max.
Yeah. That'd be so
funny. Kaza intern saying Farcoin to 5 billion. I don't know, man. Have you seen that chart recently? I think might need to reconsider that idea.
I don't know. I don't even know what it's at now.
It's probably, you're gonna make me guess. I'm gonna say like 23 cents. Like what is that? 200 mil.
I'll pull it up.
Most viable chart in crypto. He's saying. Yeah, I don't know.
It's at 25 cents. It's not bad.
Holy.
I don't know what that comes out to.
250 mil.
Jeez, I thought it would be. Oh no. Yeah, 250 mil. Sad.
Yeah, we're definitely seeing the downtick. We're seeing the downtick in meme trading, for sure.
We say this a lot, and I feel like every single time I've chatted with somebody on any app, on any like Telegram, Twitter, any discussion that I've seen, they always say meme coins are down. How the fuck is Pump Fund still buying $1 million a day? Right? Like this. No, but you're laughing, but this is legitimately. I've talked with this to Rodeo, to like people in these Twitter groups and these Telegram groups, and it's insane. Like, look at these guys. They bought 920K today. Yesterday they bought 1.1 mil the day before. They bought 1.1 mil the day before, 1.3 mil the day before, and it's like, we think it's dead, but like I haven't. If somebody sends me a meme coin, like before I was like, holy shit, I gotta buy this right now. It's gonna go up 15x. Now I will look, I will check, and then it's like by the time that I price check it again, it's down 30%. It feels like nobody's buying meme coins. And these guys are, I mean, the last 4 days that we checked, they're making 1.2 mil, whatever. Like, let's say they're making 450 mil a year. That's a lot of money generated by one meme coin app, the most dominant one, but by one meme coin app, annualized per year, at a time when we're saying meme coins are dead. And I mean, God forgive me for saying this, but I told this to Ryan Connor, and I was like, Ryan, I think meme coins will be dead next year. And he was like, I'll take a bet on it. And I'm happy I never took the bet, because meme coins are dead in my mind, but clearly the data shows that they won't die. It's like, I think they're at their baseline now. And I think if at the baseline Pump is making $1 million a day, unless they're doing something weird in the back end, which I don't think they are, because they're you can see the flow of the funds, so you can't be like yeah. It's like
Yeah,
I'll trust Dan Smith with my life on the data, and the data is clearly here. Like it's correct. They're making $1 mil, $2 mil a day.
yeah. Maybe just for context, like if you want to say dead, like March of this year when we went, the market like absolutely ate shit. They were still doing $1 million a day in revenue at that time, and so like we're like you said, we're back at that watermark again, where they've, you know, there's been some periods of exuberance. Obviously, late September, kind of like into April and May, there was some activity there. You can see kind of where Bonk entered the picture, Bonk Fun in July. Yeah, I don't know, to say like dead. I mean, you'd probably have to go to these levels like without a competitor taking away the market share. Like if they trended down to these kind of like Bonk stole all the market share and this is what we were left with type of revenues, like maybe you could make more of a case there. I think what I would say is like, and I've generally been of the opinion that like they won't die, but I would expect cyclicality, and it doesn't surprise me to see that like, you know, we had a period of like such craziness with them. Like it, you know, it can't really continue forever, and there'll be like there'll be a down period, and they'll find new games to play. Like I think they just launched like this mayhem mode thing. And obviously they acquired Padre. So like they're leaning into like additional revenue streams to kind of bolster the kind of broad product offering first. I mean, we can see Padre is only like a small fraction of what they make today, but still it's accretive to what they're doing. But yeah, I don't know. I think to say that they'll die is it's in my mind a little silly to say that like definitively meme coins will die when like 99% of the tokens that exist in crypto are meme coins, and the whole industry is not dead yet. So I think it's just sort of like the wrong side to be on when most of the trading of assets that exist in the space is speculative in nature already. Like people want to just play the speculative game. So whether this is just like a, you know, a cyclic turn for Pump, we'll kind of have to see.
Yeah, it's something that we're gonna look back on and be like, yeah, it was very obvious. No matter what the outcome is, somebody will look back and say, yeah, it was very obvious.
That's fair. I do have to fulfill one last shout out for the day. Thank you to our sponsor again, Katana, sponsoring today's stream. Katana is an L2 built for DeFi and is pioneering the ecosystem category of productive TVL. In just 2 months, Katana has surpassed 500 million in TVL, with over 90% of that TVL being productive in ecosystem apps like Sushi and Morpho. From now until the end of November, users that bridge to Katana can earn boosted yield from CAT incentive campaigns, added vault bridge yield, and other chain revenue. Follow the link in today's show notes to get started. Thanks so much to Katana. Yeah, I mean, I guess where do we go from here? I guess you were bullish Pump, so I guess I'm curious. Like, you know, you
I
think
sold my
you would
Pump.
have? Okay, you're out of Pump now.
I'm fully out of Pump. That's the only token that I fully sold that I'm like, I'm happy. So because it fell after I sold as well. I held this token up. I held this token down. I can't keep holding it down.
What was it? Like, what was your thesis there? I'm curious because, like, to
My
say
thesis,
that you would have thought memes would be dead, but then to be long the coin, like, is it just because of the buybacks or what?
yeah, I think, yeah, that was basically and I was right at the time as well. Like I bought 10th of October, like 11th of October, whatever. Like I bought it like 0.36, and then market got better. It held up really well during that, following that a bit as well. I mean, clearly everybody else was bidding it as well. And then yeah, I mean, it had like 1.5 mil a day being bought. and just off of that, I kind of felt safe. Like I wanted to have some exposure to potential upside, but I didn't want to like hold pure dog shit. And I was like, well, pump is like they're buying back the token. They have some form of value accrual. So to me, it made sense to buy. And then it went up, and I held it down. And then it went up again, and I held it down. And then this time, like I was like, yeah, I'm out. This time, I was like,
Yeah. I think pump is a tough one because this is just my read on like what the market is saying about the token, but it seems to me that like the only buyer of the coin is the protocol itself. Like they're shipping 1 million into the coin, and yet it trends lower, and like maybe that's just people expect maybe what you're saying, that like they think meme coins are going to die, and then therefore all the revenue is going to go to zero, and of course you're not going to buy it based on prior buybacks. You're buying on the expectation of future revenues. So the market's either expecting like meme coins to just go to nothing, or they think like no one else is buying this thing except for the protocol, in which case it's like
but I mean, the protocol is buying a significant amount. They've bought back 12% of the token. Like it's a ridiculous amount of the token to buy back. Yeah, I guess people don't think meme coins come back, and I don't know. I didn't like. To me, I was very much in the camp of meme coins never come back again after the first round of meme coins, and then after the third round of meme coins, and then we had AI agent meme coins, and then Trump launched the token, and then now like those 4 times happened, and I was always like, yeah, that was it, that was the blow off top, we never get them back again. And now that they're like down in volume, I'm like, oh yeah, they're definitely coming back, which makes me think I'm almost definitely wrong, because I've never been right about them, so why would I be right about them now? I don't know. The counter argument to this is history.
I think what I would say is like I would have had a much stronger opinion in mid 2024, like August, when people at that time were saying, yeah, meme coins are dead forever here. I was very loudly bullish and wrote a report about meme coins going much, much higher. And that was correct. What I would say today, though, is like I could see the outcome where this maybe is a cyclical kind of downward point for meme coins again. And so like that puts a lot of question marks on stuff like pump. The other point that I would say, though, is like they could still be a massive winner even if meme coins die, if they can build out other products with revenue streams that are meaningful. Like Padre could just be one piece. Like obviously that's still like dependent on meme coin trading, but like they could have a perps trading integration. They could do a whole bunch of other products that they can monetize, and build out like more of a platform for users, and make a ton of money. But it might just be, they're so weighted to the meme coin space today that like if we're really entering into like a cyclical down period for memes as a whole, they might just get hit a lot by the market for that.
Yeah, I'm trying to find these daily data from Pump. Like they were making 7 mil a day in December. So, but the reason I'm saying this is like the most lucrative business opportunity there is meme coins, for Pump. So yeah, like they could build out all of these other things, but like Padre's making 60K a day. Let's say it 10x is that, it's still 10x less than like an average day, and well, not an average day, obviously, like a very peak activity day in January. But I don't know. I guess like one thought, somebody tweeted this out, and it's like reason Pump is not trading well isn't because of like the meme coins, but it's because it's like the number one app in a sector that's in secular decline compared to other, like, because everything else is doing well, not price wise, but like growth.
Yeah.
Everything else is doing well, and it's like is the sexy story meme coins, or is it equity perps, or is it like the pay for order flow lighter model, or is it like Aave launching a good online app, a good mobile app, and that's something that you have to think about. Like that's more of like it's more of something that I think people should start thinking a bit more and more about, including me. Is like, am I buying something that's Because I wouldn't buy like an AI agent token right now, right? Like, why would I?
Yeah, I mean, I guess if we look at perps, like for Hyperliquid specifically, they, they were trending up into the right until August, and for Pump, the chart does not look quite the same, right? Like they set lower highs relative to the activity at the beginning of 2025. Seeing a decline now in the past few months, which isn't really surprising given where the market is. But yeah, I think to your point, we're at a point in the meme coin game, if you just look back at this year, where people are questioning, like, is this sector kind of screwed for a while? Whereas they're still looking at perps with kind of like rose-colored glasses. I think you could potentially make the argument though that, like, who knows, maybe this is near the end of the honeymoon period for like up and to the right perps growth. So maybe there will have to be a little bit of like a pullback here for that activity as well.
Yeah, like this is Hyperliquid total revenue, right? And you can clearly see that month on month it's going up. Or like it's at least staying the same. Like August was the big month, like you said. One second, I'm gonna pull up Pump, but I'm not that good at my computer, so you're gonna have to give me a second. Pump fund total revenue. There we go. And then this is Pump. I'm on the wrong thing. There we go. This is monthly Pump, and it's like,
I do think, like, I don't know, similar to I think at the beginning of this year, people got, like, there was talk of the revenue meta, and people were just over-indexed on like what that number was. And now we're in like this buybacks meta, and people, I think, are maybe over-indexing on what that number is at a point in time, and like way oversimplifying this idea that, like, it's great to have revenue and it's great to have buybacks, but the number has, like, it has to grow, like, in the future. So you can look back in the past 30 days and say, like, they're buying back so much of the token, this thing is cheap. But if that number goes down, was it cheap, or was it priced appropriately? And I think that's what a lot of the discussion just kind of misses. It's like, oh, big number buyback, but no discussion of like, okay, up or down in the future.
yeah, I guess that's, well, we're not there yet, right? Like we need to wait a bit. We're gonna get into forecasting next week.
Yeah, we need the timeline to they're still getting through that class, I guess.
Including me, apparently, who can't think 6 months ahead and who can now.
It was the same thing with the revenue meta. It was like, oh, these things have the biggest revenues, but it's like, you still have to make, you have to have an opinion on whether those are going to be higher or lower 6 months out. It's not just like, oh, it has big revenues now, because that could have been the top.
Okay.
Call it there. This is something that Ryan Connor says a lot. Maybe I'll end with this point, is that, like, he's saying that, like, daily data and like block like per block data is actually maybe more of like a downside than people think, because they tend to like over index on like, oh, they made 1 million yesterday, and they kind of miss sort of like zooming out, quarter over quarter, month over month, like, what does growth look like? I think we tend to do this in crypto a lot. It's like, oh, they made 1 million last week, but it's like, maybe that was the top of the protocol. So yeah, good advice, like, generally, maybe just zoom out a little bit.
I don't have any response to this, but I've heard it say this to me multiple times as well, and I'm getting kind of flashbacks.
All right, box in the trenches, PTSD. We'll call it there for today. Thank you so much. Do you have any shout out the newsletter? Anything you want to shout out?
People know about the newsletter, guys. Please subscribe to the newsletter. But we're doing quite well. I actually don't have to beg people anymore. Don't subscribe to the newsletter.
Don't subscribe. We have enough of you guys already. You don't even need the alpha. We don't really want you to have it. You're going to dilute the idea a little too much. So if you do want it, though, subscribe. 0xResearch newsletter. Hear from the analysts every week. Our thoughts on crypto, protocols, markets, all included. And we give out access to some of the research reports every now and then as well. So definitely subscribe if you're not. Check out the 0xResearch Telegram. Enjoying the conversation. Otherwise, that's all for today, folks, and we will see you Friday with some exciting guests. to close out the week.
We do have exciting guests to close out the week. I'll tweet about them tomorrow, though I don't want to tease it too much now.
All right. Details tomorrow. You'll find out, and we'll see you Friday.
Peace.
Peace, guys.